Okay, CMC Materials, CCMP, it's the ticker on NASDAQ. This used to be called Cabot Micro, and now it's CMC Materials. I'll cut to the chase. I think it's time to lighten here, cut back, trim, outright sell. It's a good company, but it looks like there's some headwinds, and some of the results weren't that great. Probably long term will probably be okay, but I think we might get a better entry point, and maybe the fundamentals will improve for us. But right now they're turning over, and when that happens, waiting around for it to turn is tough. Even if the price has come down, the price has come down, the whole market's come down. So there's probably some other opportunities that you could take this capital and deploy it, and that's basically our bottom line. No, I'm not going to sell it on this absolute down day here, but if I can get a little pop, maybe I'll take a look at an exit. Okay, first of all, what do? They make materials. It's very technical for semiconductors. That's their main business. They have other materials for some other things, but basically it's for semiconductors, and it's very, very technical. I'll read you a little bit of the description. Develops, manufactures, and sells polishing slurries and pads used in the manufacture of advanced integrated circuits devices, semiconductor industry, in the process called chemical mechanical planarization. Okay, not going to get into all the details. You don't need to be an engineer to understand that this is materials. There's chemicals and just like raw materials to make like silicon wafers, and it's very technical business. This is not a gold mining materials company. It's more technical than that. Okay, so one other good thing I want to say, that part of the business was up 10%. Now, overall, you can see in our graphic there, revenue was only up 2%. Okay, that's pretty tough. That's a tough number. Another good thing I want to point out is they supply 100% of semiconductor manufacturers. 100%. Literally, it's what it says in their material, that 100% of these, NVIDIA, Intel, AMD, they need these materials. They have to have these. So you'd think there'd be a good demand for it. And your instincts would tell you that. Fortunately, revenue was only up 2% total, 10% for this part of the business. That's a little light considering, there's a shortage out there. So a little unusual, right? And not only was it light, it was a miss too. So missed by 3.9% on the top line, missed by 13% on the bottom line. Although I would say the good thing is at least they did improve their earnings per share. But that's just too low a growth for what was kind of, I think, priced in. And there's probably better opportunities. Okay, let's look at it in the model. And you see back in the late or early 2000s, pretty good returns, but then had a long period of pretty mundane 7 to 9% return on invested capital, and a nice spike here recently in the last 3-4 years. And the stock moved at the exact same time the return on capital improved. So now what's going on now? Well, I hope you can see it well enough, but the blue is the trailing 4 quarters, and the white is the annual. Okay, and their year end is September 20th. So this is September 2020, and now we got 2 more quarters, and it's already rolling over. So we know, just like when the return on capital started to improve, the stock improved, right? Right in that section there. Well, now we got to go in the other way. Okay. Can they overcome it? They might. It might be a head fake. That's all possible, but it's hard to believe that. Especially when you kind of drill down a little bit. We already said they only had 2% growth. Well, they had 1% growth in the June quarter, minus 1% growth in the September, 1%, 1.7 in the, it's 4 quarters in a row of around 1% growth. That ain't great, especially in this, kind of a bull market for semis here, and they supply 100%. So, what, are they having pricing problems? What exactly is going on? We don't really particularly need to know every detail, but we need to know that return on capital is coming down. It's a red flag. And it's not particularly cheap anymore either. So it's trading at 15 times EV/EBITDA, but rolling over. So think we got to think about letting it go. I don't know if I want to sell right on a day where all the semis are getting killed, including this one. Maybe look for an exit somewhere else, but I think there are definitely better opportunities. And you know what? By the way, I'm not going to give up on this entirely. This is staying on my radar screen, and I could see myself going back in.